It's another episode full of tidbits for connoisseurs of artificial intelligence stocks. So if you want to be a part of this AI transformation that is coming up, you would like to have the exposition of your portfolio to some of that type of stocks. So we are here with Wall Street Station channel to find out whether the condition and the health of the company is fine and aren't there any canary in the coal mine. So the company of C3 AI is right now following a string of stronger than expected reports when it comes to earnings. But what's laying underneath? The pre-market is right now assessing that it will be trading lower. So it means that something is going on that is right now not really putting in favor those that are buying the stock. So Wall Street Station channel is all about showing you the technicals, the fundamentals, the sentiment behind the stock, and also to give you the verdict what I do find as a stock to be traded at what level at. And right now let me just jump through the windows in order to get you through and kick off the transmission. So at first, you may let me know whether everything works fine, whether there is a voice sound, yes, the image and screen. Let me just know, and we are right now heading to our presentation type of a view. So C3 AI is led by Tom Siebel. It's an enterprise AI software company that is known for its integrated products, including the C3 AI application platform and other applications. So these offerings that has C3 AI is about to simplify and also discover for the companies the new type of a branches revolving around AI. It's all about the development and deployment of some applications for the businesses. So what's right now going on with C3 AI is that it's trying to get a new clients in order to become this, cash cow. This Palantir is getting profitable, and C3 AI is still laggard. As we do know, also there is a lower market cap that we are dealing with. So C3 AI right now provides over 30 turnkey enterprise AI applications that meet the business critical needs for global enterprise. And among those facilities that the companies have via just the cooperation with C3 AI is this enterprise AI software with subscription model. So there is a software as a service type of a contraction and contract offer. C3 AI also offers application platform and industry specific AI applications, and there is many things that is I would say the patented model-driven architecture that is enabling organizations to simplify and accelerate enterprise AI applications. So on this AI boom, that's absolutely something very crucial. So this subscription-based business model may be this cash cow that C3 AI is looking for right now. But there are many competitors, and we'll talk about this in a second. So C3 AI for now has a great basis for this environment we are sitting in right now, as we do know that the ChatGPT has introduced the real wave or the real storm when it comes to AI stocks, and the C3 AI is the one that is gaining traction significantly. Right now, let's jump to the next element that is absolutely the theme of today's broadcast. It's after earnings. What's going on after earnings? So we are going with revenue that's right now higher than expected. So that's fine. The net loss is 64.4, and next quarter revenue outlook is 72 to 76.5, and it's all year over year. It's positive. So we can find that the company is speeding up, accelerating its cooperations, and that eventually is black and white right here, that the interest of AI is right now also casting a shadow on the outcomes of the reports, such companies as C3.ai. And for its fiscal quarter, C3.ai posted also gross profit of 40.5 million and 85% of total revenue. When it comes to free cash flow, we are still underwater, but it's something that it's giving a ray of hope as this overall data is getting better. So we have beaten Wall Street estimates, and that's something we cannot really skip. Also, something that is very important is that the C3.ai has reached new agreements with such companies as Pantaleon, Bell, Cargill, Tyson Foods, Shell, and US Department of Defense. So those are the names that may play a key role in C3.ai becoming the first video type of company when it comes to AI services. So the one thing I wanted to point out is that not only this free cash flow that is lowering and remaining performance obligation that is still quite high. The company also withdrew a previous forecast that it would reach a non-GAAP profitability by the end of fiscal 2024. So it means that right now the outlook is deteriorating, and this possible slump on the stock market may be validated and justified by this all assumptions. So what's the outlook right now? Let's look at the graph. C3.ai Incorporation revenue estimates for current fiscal year. It's at the purple one. For the next fiscal year, it's the orange, and the blue is the one for 2 fiscal years ahead. However, is the C3.ai cheap right now? Current price to sales ratio is at 13. It has slided from 16 after recent downturn, but we are still very, very far from where the competition is. So there is a hype around C3.ai, and as long as there is a hype, the company may be pushed forward. But when this hype will slow down, we will need to justify the valuation by strong foundations, by so strong basis and introductions of new technologies. So this subscription-based, based to a consumption-based business model may defend itself only if those new introductions take place. So CEO also mentioned that the company anticipates material impact from the business model change after 3 more quarters, with a 15% increase in fiscal 2024 revenue forecasted. So this, as we can find on the article, this represents a significant improvement over the 5% growth seen in fiscal 2023. So there are some of the foreshadowing projections that the C3.ai may get profitable, but why this profitable prospect on 2024 has been withdrawn? That's a huge question right now. So what's next after what Thomas Siebel said in a statement after careful considerations with the leadership and our marketing partners? We've made the decision to invest in lead generation, branding, market awareness, and customer success related to our generative AI solutions. So they are really putting up that key theme, that the artificial intelligence will be the dominant power pushing the economy forward, and they trying to really ride this wave. So those cooperations with Shell, US Air Force, or NG of lately are the one that are supposedly giving more profit C3 AI. But as we do know that this hype around artificial intelligence is going in waves, so we might be right now at the tipping point of the wave, and what will happen when this hype around will extinguish a bit. It will need from us a more introduction and more implementations open away. Also, based on providing customers C3 AI with this unified platform for AI applications should really deliver results faster if they wanna just compete with the strongest name in the sector. Also, we cannot really skip that the competition in this branch is really huge. That's why we need to not only generate meaningful value for the companies, but also scale AI across the business. So is C3 AI ready for this? It's still yet to need to show it. So right now, even though the C3 AI is gaining a strong traction from enterprise AI applications, and this hype around C3 generative AI is true, we need to deliver this by the hard data coming out of the earnings report in the next quarters. Right now, let's jump to the exact data, what's going on with C3 AI, and cash flow right now is better in Q1 of 2023. It has jumped to a great positive outcome, and right now we are a bit underwater with free cash flow droning, but still there is a positive tendency, and it should remain unclear. However, with this stagnation back in 2022, when this AI hype wasn't the dominant power on the market, we were sitting in the much bigger limbo. Right now, when this AI hype is going through and taking a whiplash, we are delivered to bring more successes to the cash flow. Revenue also is fine. However, it's stagnated for a while, but it should get pushed higher with new implementations. Shares outstanding, so we need to take care that the shares outstanding is right now something that may bring more headwinds as this dilution may increase a bit. Also, when it comes to cash and debt, we are eventually going with higher cash, and that will be supposedly better for the future performance and return on invested capital. So that's about the option chain. Sorry if the graphics haven't been in a high quality, so I will try to anyway just revolve around it and just quickly smooth through it in order to find out what's going on. So right now, if we just have a look at, maybe let's jump to C3 AI. We are right now sitting at around $31 and pre-market is at 28.3. We are with a strike and expiration date on 8th of September, so it's tomorrow. We are with opening interest, the highest opening interest, sitting at $34. So it's right now it's skewed to the upside, whereas opening interest, the highest opening interest for the stock is right now at 30. So the hype around the stock is right now still huge, and that's why the market is discounting the inverse I would say inverse trajectory, as normally when there is a very strong skew to the one side, the estimations of the price of a stock, the market usually goes the other, as the herd is usually in a wrong position when it comes to the tipping points on the market. When it comes to third Friday of the month, C3AI is with opening interest the highest one right now at 3,047 open interest. That's appointing $30, and the one that is right now finding the puts is also sitting that we should get to $30. So this, I would say, wiser type of a matrix prepared on Fed Friday of a month is right now pointing that we should trade lower than it's currently. In the Fed Friday of a month, the highest volume of the large institutions take place when playing on options. That's why I'm sticking more to the data, but retail right now should be missing the point, and pre-market is just right now discounting this. So the trend right now on technical side of a C3AI is in progress. If we just have a look at the current situation, we are right now on a weekly basis been formed a 0.6 Fibonacci extension at the first wave, and the second one, let me point it out, and the second one is still above the point when we get back in the first leg. So it means that making the history as a I would say rhyming type of pattern, we may get right around to 26.59, especially as though that's right now the key point of value on VPVR. That's around where the pre-market is right now being assessed. So it's absolutely crucial to find out what the patterns are telling to us, and right now the market is assessing that the extension of this wave will be right sitting at this the same level of extension that we were going through the last time. So it means that 27.56 would be the very fine point to buy the stock. However, if we just have a look at the pre-market once again and where the congestion area is, yes, it's absolutely sitting at 27.61, and it should hang on here for a while, and we will await for the possible base to build up right here. If it build a base as it was right at here with lowering volume and also some of the signs of a reversal, I would stick to a positive outlook for C3AI. However, for now, I do expect that C3AI should take more time in order to stand up once again and right to next important point, that is 53 and 55 indeed. So when taking a point on technicals right now, that's what I have just told, but looking at the macro picture on C3AI, is it right now a time to buy? So the ISM manufacturing PMI has appointed that lowering level in the last month, and as we do know, the stocks are I would say the vacuums and valuations of stocks are the vacuums of excess of liquidity, and excess liquidity is when this normally when this PMI is thriving. So right now, as we have dropped to lower 50ish, I do expect that this rapid decline may eventually have spiraling effect on lowering valuations of stocks. However, when you just have a look at non-farm payrolls, it's not that bad. So this outlook, this environment, when we are that we are going with our economy right now, should not really spoil the positivity to large extent. We don't find this situation that we are sitting right now as the dominant narration that will push the Fed to change the this stop in interest rates level. So as we do know, the C3AI is this growing company. It's the growth type of a company. So as demand will remain soft in the economy, right now we will find that all the books for the company, all the books for buying the company will be not very, I would say, outstanding, but as we are getting through stronger economic growth in the last quarter, and also that's assessed by Federal Reserve, we may get through better valuation along the way. However, we are still dealing with problems that is high interest rates, high inflation, and consumer not very high consumer confidence, and that's why I do find that right now there's not the best outlook for the growing companies as relying that much on the lending conditions, and that's overall difficult to kick off bold investments when interest rate is so high. So that's about the company right now. The final thoughts. So final thoughts and predictions. So analysts have estimated that the company should trade at around even at the similar level when it's right now sitting at, and maybe even lower than it's right now, as this AI hype may eventually silence down a bit. But those highest valuations are sitting at around $50. So what we can say about that, I don't really stick around this analyst type of things, because it's strictly it's the longer it's far-fetched, the weaker this powerfulness of the analysis literally is. That's why I would rather have it in a type of a margin when it comes to where the stock may eventually be pushed, taking into consideration current market environment. But when it comes to final thoughts, the main problems right now that I've just pointed lately is that the C3AI is the company that, even though the earnings report have beaten the Wall Street expectations, they've withdrawn profit forecast. So it means that there is something going on underneath, and they may expect the lowering demand in the future. Also, this C3AI overall is the company that converted itself from the energy type of a company. Right now, it's delivering the AI solutions, and that's why it needs to still prove that the I would say the team of specialists, the team of professionals are about to deliver everything they say in the reports. So there are also some of the demo unfinished products that should be ready to use, but we need to just stay cautious in terms of what do they deliver, and don't become over optimistic. So let me know in the comments section below the video whether you are up or against buying C3AI, and whether you find this time has been the fine time. From me, that's everything. We are seeing each other tomorrow at 8 a.m.